Hi, gold traders. Let's take a look at this week's market behavior. After our last uploaded YouTube video, we provided regular updates to that video on our free Telegram channel. In those updates, we explained that US Fed Chair Powell's upcoming appearance in a discussion on Monday, the 30th of September, would cause price to head toward our key level of 2,634, as highlighted in the video. On the day prior to Powell's appearance, price hit the 2,634 level area for a bounce. We immediately posted a message after that bounce stating that price would retest the 2,634 level just before or during Powell's appearance. Powell's remarks during the aforementioned appearance would be the lens through which the remaining week's labor-related data releases would be viewed. The week's labor-related data releases from Tuesday up until market close on Thursday would also be analyzed to work out the odds for a strong NFP report on Friday versus a weak one. On Tuesday, we had the ISM manufacturing PMI and JOLTS job openings data releases that both dueled to create asymmetry. As a result of the asymmetry, we saw a modest price drop off the knee jerk, followed by a swift correction that led to a short period of consolidation. On Wednesday, an ADP number that came in adding to favor the odds for a stronger NFP was met with a difference of opinion between smart money participants, with price failing to break out of the preceding tight range like it should have done, given the size of the ADP number. The U.S. unemployment claims data release on Thursday took price in the expected direction off the result, but we saw some manipulation by the smart money when they reacted to the data after digestion and began tracking price higher prior to and upon the release of the ISM Services PMI. At this point, we need to highlight an important aspect of market participant behavior on days where we have market volatility due to red flag events on the economic calendar. Smart money participants, namely major professional traders and institutional players, tend to react to data releases after they have digested the results, although there are some exceptions to this rule that we do not have time to discuss in this video. Less professional and weaker hands tend to proactively trade those same data releases by positioning their trades just before or on the release. With the aforementioned in mind, note what happened on Friday. The payrolls number came in much bigger than forecast, and that inevitably tanked gold down. Having analyzed the footprint charts and the rate and nature of the momentum churn inside the price bars on the 1 hour using lower time frames, we saw minimal manipulation to suppress price further down, and it hit a hard floor on one of our key levels. As soon as the Americans were in full flow for their session, price started to track higher. Our analysis indicated that this was a great place to buy, since the smart money were reacting to the data after digestion, taking price back up with a strong trending move to not only fully correct the knee-jerk tank down off the initial NFP release, but break above that as well. Now, if we consider that a weak jobs report would have, in theory, given the U.S. Fed a stronger case for larger rate cuts, a much stronger report reduces the case for that. Remember that only a subsequent supersized cut will drive gold prices higher faster. We believe that the markets did not fully believe the accuracy of the initial NFP release on Friday, and thought that a revision may end up softening the figure, especially when the U.S. dock workers' strike is fully factored in. That cynicism about the actual versus the revised figure has partly been generated by the revision to the creation of jobs that were originally reported in the 12-month period through March 2024, where the revision to the total payrolls level of negative 0.5% was the largest since 2009. On top of that, the asymmetrical nature of the data dump in totality for this week still has the markets believing that the next rate cut will be another supersized one. We now go into next week with price trading within a defined and manipulated range before the release of the FOMC minutes, with the best play being buys from strategic dips. As always, our VIP members will profit by trading level to level using our intraday levels and key take profit targets. See you next time.